Hi, Pramod.
Hey, how are you?
I'm well, thanks. How are you doing?
I'm doing all right. Where are you based?
I'm speaking to you from Dubai. We have an
Ah,
office in Abu Dhabi,
ah.
um, and I actually reside in Dubai.
How's the situation out there with the whole COVID situation?
Yeah, it looks like it's opening up. Flights are beginning to resume as normal, and they've lifted all of the movement restrictions. So bit by bit. Are you in Belgium?
Yeah, Belgium, and it's the same thing here. We are just trying to open up. We are skeptical at the same time positive that we will get a new normal soon. The schools open briefly, and then we are getting a holiday season soon next month. So looking forward to that holiday as well.
Do you have children?
Yeah, I have two kids.
How old
Uh,
are they?
my kids, my daughter is like 11, and my son is 2. And you?
Oh, you have a small one. Okay. Um, yeah, I have a 14-year-old daughter, and I have a 19-year-old son who's in university.
There's a big gap between them, so it's about, I don't know, 10 years or something gap.
Right.
Uh, yeah, but yeah, it happened.
Yeah.
Hey,
Yeah. Well, it's tougher for the very little ones because they lost all ability to kind of socialize with their peers, right? They can't use mobile devices to call their friends.
no, absolutely, absolutely. That's the biggest challenge that I see with my son because, uh, first of all, their kindergarten is closed, and then you have to sort of be with them full time, and then pretty much every other hour they have different demands because they cannot play with their peers, and you have to somehow adapt to that, right? So it's a bit of a challenge for them. Yeah, indeed.
Indeed. Absolutely.
Yeah. So, how's the business?
Yeah, look, things are extremely busy. The lockdown, uh, I think, if anything, has really accelerated the pace for those of us in the digital assets business, so to speak. There's all kind of a renewed interest in the space among industry, but then also, as you've seen, such a significant push among governments as well. And it's actually the pace is really quickened for us. It's pretty much nonstop these days, to be honest with you.
Mm. And how do you see the adoptions as far as the new technologies adoption in the traditional organizing is concerned?
Yeah, I really think that that it's actually accelerating. The pace of adoption is accelerating. Now, we operate very, you know, clearly in the digital security space. So we touch on to, cryptocurrency insofar as uh, cryptocurrency is used as a means of payment to come into the system. But really, we're focused on digital securities and the compliance and the interoperability associated with those. And so when you talk about adoption, there's really sort of, I think, three different types of adoption that you need to kind of, pinpoint. I was saying you've obviously got regulatory adoption, which is not so much about whether the regulators adopt the assets, but whether they will, you know, regulate them or permit them, such that institutions will adopt them. And that's the second level. You have the institution, the major financial institutions or the incumbents. And then, of course, you've got individual users or investors. Um, and what we see is regulators are, in our view, they've always been really willing to look at these new technologies, but I think that they've been reluctant to bite off too much at one time for obvious reason. You don't necessarily understand the new technology, and then a lot of what was being brought to them in the early stages was exotic, not because of the technology, but because of the deal structure that was being proposed. And so they took sort of a prudent approach, but they've always been interested in it. And I think now, as I said, in this period, they are even more interested in accelerating the pace of their regulatory review, just because they see it. I mean, we see all these different governments and central banks making a push toward digital currencies and things like that. And then as far as institutions, my view is that institutions have been keen to adopt this for some time, but they tend to quietly investigate, explore, experiment within their own four walls before they sort of go large with things. So so that's been ongoing, but now you see a little bit more commercialization, if you will. And then as far as the individual investors, there's obviously been a large and active crypto community, and certainly in the the go-go days of the ICOs, there was a large and sort of engaged, I would call it a niche community. But that doesn't necessarily speak to what we're doing in digital securities, and there we're talking about traditional investors. And I think that you can't gauge their level of enthusiasm for adoption until you have good assets for them. So I personally think that investors will go after good assets, whether they're tokenized or not, and the tokenization will create better liquidity, and therefore potentially more rapid user adoption. But it all starts with good assets, and in the absence of good assets, nothing else moves.
So how do you ascertain anything to become a good asset? What it takes to do that?
Well, I think that nothing has changed in in this age of blockchain technology. A good asset is a good asset, and that is it involves a degree of transparency, number one, so I can see what it is, and therefore I can then, number two, price it appropriately. And of course, the pricing mechanism is not just the underlying, but also market activity. So that's the third piece. We need liquidity. So none of that changes. And I think that one of the mistakes that was made in sort of the early STO days is that there was this assumption that simply tokenizing an asset, any asset, would create a dynamic similar to what was seen in the ICO days. And that was never a good assumption. It was never one to which we subscribed, for sure. And when you layer in the compliance factors and regulatory oversight, that regulatory oversight actually enhances the marketability of good assets, but it also exposes assets that are not good. And so I don't think that anything has changed in the world. So what we look at this moment is assets that already enjoy a high degree of liquidity and a high degree of acceptance by the investor community. And that's why we're doing a lot of work with our partners, Wisdom Tree, for example, in the ETF space. Those are good assets, and they're ideal assets for tokenization, if your objective is to reach a wider audience and more and accelerate the pace of adoption.
One of the key points that you mentioned before is around the adoption of technologies as such, and I'm looking at my own bank. But I still need to do a lot of things manual. I still need to go to the bank to get things done, including, let's say, buying my house, right? So right. Those things are pretty challenging to sort of fix. Those things are pretty challenging, and then on the other side, I'm home and I'm buying things online, and it's possible. what is stopping us there? Aside from the regulatory aspect you mentioned, what is stopping us from getting there where I'm comfortably in future can buy a house online?
Well, that's a great question. I think much is being done already. There was always already a very active push toward, moving more and more, and you're describing sort of retail banking services into a digital environment. And again, this is another place where I think in the post-COVID world, this has been really accelerated. But your question is a very good one, and really it comes down to a couple of things. First of all, and not surprisingly, not coincidentally, this is our focus, right? So number one is compliance, and then number two is interoperability. Those two things. So we see that, for example, if we roll back the tape and we say, well, what a marvelous technological advance, SWIFT was. And why? Because it really streamlined, that communication, if you will, between financial institutions or among financial institutions, and therefore it streamlined the movement of value. But what was the key? The key was, number one, arriving at some kind of a common language, if you will, right? That's interoperability. And number two, gaining regulatory adoption. That is to say that the banks had to know that doing business that way was going to, keep them in compliance with the regulations to which they're subjected. And the same thing is true for all of these activities. And solving those issues and streamlining the compliance around it and enhancing the interoperability is a big step. Now, I'm not going to downplay natural sort of competitive friction in the market or the impact of inertia, right? To a certain extent. People get used to doing things a certain way, and they say, "Wow, it's not great, but it's fine or good enough." And that's always an obstacle to to adoption. But really, I think that particularly among let's call it the millennial generation, there's such an ease or a facility or a fluency with digital technology. That there's almost a demand for precisely that type of convenience that you're describing, and it's coming, but it really does require those elements of ensuring that compliance will be respected, and then that interoperability piece. Now we obviously can't overlook other things that you can't just sort of pop up a digital platform and say, hey, I'm going to behave like a bank. We've seen that done. In the DeFi space and in other spaces where you kind of run into trouble. These regulations are there for a reason. Capital adequacy, those requirements are there for a reason, and that's important. You can't just pop up a digital platform and say, well, we're going to remove the brakes from the car and just go 100% for convenience. You still need that rigor that is required in the financial services industry and imposed by regulators. But to the extent that you can find that marriage, and where does it come from? So we see that banks themselves are going digital, but often they're so encumbered with their legacy infrastructure that they can't really wring out the kinds of efficiencies that are really necessary to push this forward. On the other hand, the challengers are much more nimble, but they don't have sort of the heft that the banks do. And so when you lay out this problem, you kind of feel that they kind of have to work together or find a way to work together. That there's going to be a give and take, but that's not necessarily the way that it always goes. And there's a reason why these digital banks are called challenger banks instead of collaborator banks, right? They're called challengers for a reason. It's not always easy to find that collaboration, when somebody is coming at you with a new idea.
Because I'm looking at my own banking, and what has not changed in the banking space is three things fundamentally that I see. One of them, obviously, you have access to the credit. You are able to sort of, move your cash and then store the cash, right? So fundamentally, that has not changed. And even if you say, okay, we have internet now and you are able to see the balance and do the transfers and so forth, and that doesn't change. And that sort of seems to be bothering me because I see other companies like Revolut and other companies that are starting up or just been in the industry for a while. I see that the kind of services that they're offering, and I see, wow, why my bank is not offering those things?
Yeah, I mean, look, Revolut is a great example, and I think what you're going to, this is really this is an important part of it as well, and that is that societally we get very, very accustomed and locked into certain paradigms because and paradigms that were put into place because at the time it was required that those types of structures exist in particular lanes. And so, for example, we've always sort of thought about, well, here's banking, this is one lane, and then over here we have securities, that's sort of another lane. Over here we have communication, that's another lane, and so on. And more what you see is that a lot of those distinctions, some of them are, they're still maintained because regulatory structures went up around them. So, for example, in the US, you have one agency that's overseeing securities regulation. You have another agency that's overseeing, derivatives, and another agency that's overseeing, banking operations. But technology really begins to, blur the lines, between those different activities, such that you begin to realize that you can really kind of bring them together, but then you've got to get the regulatory structures aligned with that movement. That's not something that happens overnight. So some of it becomes artificial. And I think that, challengers like Revolut, what they're doing is recognizing, well, we can't necessarily change the underlying regulatory or even the financial services infrastructure overnight. But what we can do is begin to merge the experience of a consumer so that even though what's really happening in the background is, there are different rails that are, manage or processing these types of activities, at least from a user experience, I'm merging those things together to make it, more convenient and really more sticky, if you think about it that way. And that's a great approach to, at least what I would call sort of as a stopgap or interim measure. But the end objective is to really, see where technology can help to really break down some of those distinctions. Here's a good example. One of the things that we have been focused on sort of since day one, and you can see it in our name, it's securities and currency. And why put those things together? Because, they're just different forms of value, but they're still value. And so if you can transact in any kind of value, instantaneously and conveniently, that changes the entire dynamic. We've grown up in a world in which you need to move out of an investment asset and into, a payment type asset in order to make a payment. But it doesn't have to be that way. And now the technology, and this is what we've been working on for a long time, to bridge those two so that you can create one seamless experience. And so now the experience is one of being able to transact in an investment asset as conveniently as if you were making a payment. Or, to put it more precisely, to use an investment asset as a payment. And so you see how that sort of brings things together. That doesn't mean that just because the technology permits that we've broken down all the regulatory barriers behind it. That's not the case. Nor do we believe that regulators should just sort of rush to tear down everything and replace it. That's a recipe for chaos. But if we can bring those experiences together on the front end and on the back end, begin to show how compliance functionality can be integrated as well into a single or a smaller set of experiences, then the regulation will follow, and that's the approach that we've taken.
You touched a buzzword earlier before about DeFi. How excited are you with DeFi?
We are super excited about DeFi. We think that this is the future. I think that as with a lot of things, the name itself, the word itself, may be getting a little bit of a bad rap because of some of the early stuff that's been done in its name, right? But conceptually, it is the future, and I think that any intelligent observer, I shouldn't say that, that's kind of pejorative, but I should say any objective observer of the space would recognize that directionally this is where things are going. So yes, I mean, we're super excited about that, and again, that's just another way of merging these experiences.
One of the core components of making, let's say, banking institutions more efficient is by adding automations and AI. What sort of view you have towards that?
Well, again, this is in our DNA as well. Now, we're not, we don't hold ourselves out as a machine learning company, and you won't find it in any of our literature. But if you look at our CEO and his background, he was involved in some of the most significant early AI projects and machine learning projects, and so that is sort of in our DNA. Clearly, this is a significant and perhaps the most significant part of this technological evolution in the financial services industry. But again, how that plays out on a timeline, vis-a-vis regulatory frameworks, remains to be seen. But yeah, robo-advisory is now a thing, right? It's not, it's no longer considered a novelty. So there's an example of how rapidly, things kind of move and evolve. But there's a whole lot more to it, to a certain extent. You can see it's not truly AI in the compliance space yet, but you can see where this begins to move and migrate in that direction. As you try to automate more and more of the governance, but you need to do it in a way that is both transparent and predictable. And so as it evolves and as the industry, the market becomes and regulators too become much more familiar with and comfortable with it, this is clearly the direction that the industry is headed.
Indeed, and especially with the whole situation now, I'm a consultant for, let's say, a financial institution and also an insurance company. So right. I sort of, was in touch with a lot of senior executive, and then, with the challenge that we had, a lot of phone calls coming in and so forth. There were some integrations with the AI component. And that sort of helped the company to reduce the number of calls, right? And every call the client calls into the company, it means like the person has to be on the other side to receive the call, and it costs money, right? So, and most of the time those calls are pretty generic, like where can I find this information, or what do I do next, and so forth. And with the use of AI, more on the conversational side, then perhaps it solves a lot of things. So that's where that's where the question is coming from.
Yeah, no, look, that's exactly right. And the blessing and the curse of advanced technology is that on the positive side, you shorten the timelines to perform basic activities that become day to day. On the negative side, that becomes an expectation. I think about the old dial-up days of the internet, and we were just happy to be getting online. Now if a web page takes more than 5 seconds to load, I'm frustrated. And so the expectation rises.
We don't have patience, we don't have patience. That's all.
Right, exactly. So the consumers now are, it's almost become an expectation. And so this type of, of automation is, goes beyond, neat and cool, and it goes into necessary for survival, right?
Indeed, and that's where we look around and find the things that is more applicable to us, and see what is going to help, and that's where the mindset of the leadership around the digital transformation is necessary. And I often find that the people who should be taking those calls sometimes are not prepared to take those calls, and often and I see a lot of banking institutions going towards that slope. How do you see that, mindset being one of those attributes towards the failure?
The mindset of the banks, you mean?
No, the mindset of the leadership. So if you think about this, the leadership, we should be taking those decisions, right? Okay, yeah, we need to go into this direction because we need to change, right? If the leadership is not prepared there, then obviously the whole organization is around that leadership's, decisions, right? So how do you see the impact of those mindset?
Yeah, and this is a great question, because I think that a lot of times we tend to look at issues like this, and we make them binary, instead of understanding that they really are sort of multifaceted. And so we tend to say, well, this particular leader is either open to innovation or he or she is not open to innovation. And that becomes sort of, a very, binary sort of analysis. And that's almost never the case. The questions tend to be sort of more complex. When if you ask the CEO in the abstract, what do you think about innovation? Yeah, that's great. I think innovation is fantastic. And then you bring the CFO into the conversation, and then looking at the numbers, and then the CIO comes in, and you start layering in, what does innovation actually mean? What does it mean financially? What does it mean operationally? What does it mean, to my marketing team? And it becomes very multifaceted. And so I think, one of the things that really gets overlooked a lot, because we tend to look at it and we say, well, is this leader, a visionary, or are they in favor of innovation or not? The other thing is, have the technologists, made that transformation easier? Have they thought about what that process is like, for a large institution, and have they really created, an efficient and cost-effective ramp toward that type of, digital migration, so to speak? And I think the good ones do think that way. I've talked a lot about interoperability here, and again, that's certainly self-serving, because it's right at the core of what we do. But that's really important, to be able to say to an institution, you can adopt this new technology, without overhauling your existing systems, without making, very, very cataclysmic architectural decisions that, if you get them wrong, you're saddled with, huge costs, and basically, somebody's going to come and want to lop off your head because, you made a mistake. Our CEO, Dan, he likes to quote a famous technologist whose name escapes me at the moment. But the quote is fantastic. It's, if you want innovation, lower the cost of failure. That's important. And I think that we have to think about that from not just from the side of an institution that is contemplating innovation, but from the side of the technologists as well, and say, well, it's one thing to say, look at, this thing is really cool. I've got a car that can, fly, 30 feet above the ground. Right. Okay, great. But have you taken into account how we're going to manage traffic, at 30 feet of altitude? Where's the infrastructure to support that? Where are the regulations? Where are the rules, right? And I'm not suggesting at all that most technologists don't take that into account. I think that they really do. But I think that it's it is something that adds another layer to the analysis, or another facet to the analysis of whether or not someone is open to the transition. So in our experience, there's a kind of an aha moment where someone in the company says, "Oh, I can adopt your technology and experiment with it, and even deploy it commercially without being, without having funneled myself into a lane where it'll be difficult to get back out of it if that doesn't end up working." And that moment is usually the moment where they say, "Great, let's let's figure out how to do this." So it's not that they're closed to innovation, but they definitely don't want to go down dead end streets, and one can understand that.
I'm still trying to sort of put it together into how do you sell or buy in the trust, right? So everything comes down to trusting a technology, or trusting, let's say, consumers' data and so forth. So whenever a new technology come in, how do you buy the trust from those leadership?
Yeah, so that's these are really, really great questions. Trust is everything.
It's an open-ended question.
Yeah, well, it is. It is, but it's a good one. It's a good one to explore, because I think the easiest way, right, is what I call vicarious trust, right? Everybody's using Microsoft products, so they must be okay, So but you don't start there, right? You've got to you somehow have got to earn that trust, and so when you're talking about a new technology, you look in the market and you say, well, you still have some degree of that vicarious trust factor where, the company is looking and saying, well, who else is using this? And what do I think of that other institution or that other organization that is using this or exploring that technology? There's almost no way around that. That is always going to be a big part of it. But really, I still think, and I don't think that I'm old-fashioned in saying this, but if I am, I'm okay with it. I still think it also comes down to a lot of personal relationship. That is, it's not, you can't say I'm a nice guy, but my technology stinks. That's not going to get it done. But you can, through personal relationships, earn, that partner's time, and earn that partner's trust insofar as they're willing to hear more and learn more. And so I think that those personal relationships are vital. And that begins a conversation. Your technology has to, then kick in and carry the conversation for sure. And I guess the other, again, I can't get off of this interoperability thing either. They have to be able to work with other people if they're using your technology. Yeah. So, that's another factor. That's another element of trust. But, but ultimately, in the end, when you've earned a client's trust with your technology, is when they're no longer actually thinking about the personal relationship. They just know it works. I don't know, who installed the power line in my house, to my house. I just know that I flipped the switch. If I do know him, it's probably because something went wrong, right? When I turn the light on and it doesn't work. Right? So once the technology is adopted, then that element kind of goes away.
Talking about trust, one of the technology that I'm quite curious about is blockchain. And I happened to talk to one of the CEO of one of the company who are involved into the blockchain technology, where they are sort of tracing the gas, and then the liquid and solid materials from the origination to the destination, meaning when they was created until it was delivered. So when you are able to show those information to your client, then obviously there's a big validations from the technology itself, and perhaps that creates the trust, right?
Yeah, that's right. That's right.
Yeah. Yeah, I mean, and when your technology itself becomes that validator or that's proof, then you're sort of, at least having those conversation around, okay, what do we do next?
Yeah, and this ties into another point. That's a very, very excellent point, and part of it is also think of what we do in the technology space. I'm not I'm not an engineer. I'm not a coder. I'm not a technologist. But I've been around technology for quite some time in various roles, primarily business development and strategy, right? And the one thing is we get so enamored with our little language. So I'm also a lawyer by training, and lawyers do this all the time. They use these words, and there's even a name, right? Everyone refers to it as legalese. Look at all the legalese, and sometimes those words are essential. Right? Often those words are essential. The precise formulation of a provision in a contract is very, very important. But when you are trying to negotiate an agreement, what is more important, at least initially, is what's the desired outcome, or what is the effect of this, which needs to be put into plain language. And then in the background, the lawyers with their fancy Latin can go and they can craft that into legalese. But that nobody wants to hear. That nobody wants to talk in that language, right? They really don't. They want to have normal. I'll deliver you this product at 3:00 on Tuesday, and you'll give me X number of dollars, right? So. We do something similar in the technology space, and we kind of are hoist on our own petard when we do it. We talk so much about the technology, proof of work, proof of stake, zero knowledge proofs, and that's really cool. Nobody except the people who are doing that really care. Yeah. And in fact, what ends up happening is that when you say blockchain, people freeze up because they say, well, I don't understand it. And so, yeah. It makes me nervous even talking about it. So why are we talking about it? How about if we say things like, I can make it so that, I've reduced your costs by, 15%, or, I can speed up the transaction time, by 200%, or I can automate a function that normally would require 2 compliance officers and 3 lawyers, and now it requires none. Getting rid of your lawyers, as a lawyer, I say that's a good selling point to anyone. So I think we need to stop talking about the technology and just talk about the outcomes. We talk about this internally all the time. No one goes into an automobile showroom and says, "Can you explain to me how a combustion engine works?"
That would be fun, right?
Right? And quite frankly, when somebody asks, well, how many horsepower, they're probably just showing off, right? They just, the reality is, does it look good? Is it going to break down? Can it handle the rain and the snow? These are outcomes.
Yeah.
And those become more important. And I think we should be talking about the technology in terms of outcomes, and only in, behind closed doors, geeking out on all these, these fancy terms. I think that blockchain, the word blockchain itself may have, become more of a negative than a positive in certain circles. And we have to think about that, and there are other terms that are like that as well.
Yeah, because if I'm selling this to someone who's not tech savvy, then perhaps they would never get it, right? What we are selling is nothing, right? So, but perhaps what you said is correct. We are selling value, but underneath the value, there is a big technology that is supporting us to create those value, right? So that's what we should be talking more.
Yeah. Yeah, that's right. That's right. I mean, you know, I think, when I was growing up, this concept of a door-to-door vacuum salesman, right? You think about it, you could have this person standing in front of your door and, describing, in minute detail, the technical superiority of this particular vacuum machine over the other guys. But that's less useful than if he just takes it out and runs it across the floor, and you go, "Wow, that I cleaned up."
That was fast.
That's it, right? That's sold, right? I see. So, that's really what it boils down to.
Yeah, yeah. I think that's in essence what we should be advocating for. And let's talk about your company itself. Like, what kind of challenge that you are solving at the moment that otherwise it's difficult to solve, or at least others have not really solved it yet?
Yeah, I think there's a lot of great work that's being done in this space now. We've been looking and working on this for 5 years. So we're glad that there's now a renewed interest, or I should say an enhanced interest. And that isn't to say that there aren't others. There are a number of others who, philosophically share our view, that compliance and interoperability lie at the center of any advancement in the financial services space. This is definitely true in other industries as well, but we've been really focused on the financial services space. And so this goes right back to the beginning of our conversation. How do you create a common framework for compliance? And how do you do it in a way that respects the technological and architectural decisions that different institutions and different organizations make, so that they can speak with each other? These become the most important, let's call them the pipes, through which value is going to move, and that's ultimately the whole point of the technology advances in the financial services space. How can I push value out, to the very edges, but do it in a way that's compliant? How can I create more inclusion in the financial markets, while retaining compliance? You have a technology like blockchain in its very early inception was very inclusive, but also completely unregulated, and not surprisingly, bad things happen. And when bad things happen, technology gets a bad name, and when it gets a bad name, regulators freeze up, and when regulators freeze up, institutions freeze up too. And so you really have to start with transparency, compliance, and interoperability, and that is really where we began philosophically. So we think that we have been attempting to solve the most important pain point from the very beginning of our company's existence. And now we think that the spotlight has kind of moved over onto this space, and here we are. So it's a hard slog, and of course, anytime that you are proposing a standard, that's also, or at least some kind of a standard, that's also a challenge. Because the very first thing is, well, why that standard? Why not another one? And but I think by definition, a global and interconnected financial market can't have a multiplicity of standards, because that is, that's an oxymoron. That's antithetical to the whole concept. So so there. And we all know from a technology perspective that it's not always the best technology that wins. In fact, quite often it's not the best technology that wins. It's the one that gets to market fastest. So how do you reconcile those things? Well, that's tough, because if you're trying to develop something that is as comprehensive as what we're proposing, you can't move willy-nilly and rapidly into the market. And then what ends up happening is often inferior solutions present themselves, and that results in two things. Either those inferior solutions are adopted, which is not good for the marketplace, or even worse, they're recognized as inferior, and that is ascribed to the entire technology, that people say, well, it doesn't work, you know, and that sets you back as well. It really hampers adoption of a good technology. We see that, but that's sort of the the cost of doing things well. But we think that we really have created solutions that address those main issues. And so, more recently, we've invested a lot of time and effort into really speaking with and working with, what we would call very mature players in the space, in the industry, not necessarily just technology companies, although of course them, but financial services provide, and of course regulators. We spend a lot of time talking to regulators because we have a great deal of respect for them. They have a tough job. They're like referees in a sporting event. Everybody hates them, but if they weren't there, it would be chaos.
Yeah.
And so we have a great deal of respect for the difficulty of their job, and as with the the fellow with the power line that I referred to earlier, you really only notice a regulator when you're upset with them. When things are going well, you don't give them credit. But they do, they perform a role that allows things to go well. So, we spend a lot of time talking to them too, and making sure that, we're addressing their concerns. And that's time consuming, but we think that it pays off in the end.
And how do you see the consumer banking side? The evolutions that we are talking about. With all the technologies that are available now. How do you see the evolutions? What would I get as a consumer? Different from what I'm getting now.
Yeah, well, as I said before, experience, right? The convenient experience. We've all had. You were alluding to it earlier. We've all had our frustrations with sort of how long it takes to do simple things, or things that we recognize should be simple, but they're just not. There's I experienced it out here, and I know in other markets as well. It's the same thing. Just a simple thing like opening a bank account. And they say, oh, well, you've got to come in. I've got to see you. I need a note from your mother. Can you get a letter from your congressman? It's just, and it reaches the point where you're looking at them and saying, I'm actually trying to give you my business. Why do I feel like I'm working for you, right? So that experience, is one of it's the opposite side of it. It's an inconvenient experience, and so consumer adoption, I think, will always gravitate toward experience. The consumer is going to assume that you've got all the other stuff in place. They're not going to ask you, how compliant is this in 25 jurisdictions, and did you talk to the the banking regulators in that. That's not what they're asking you. They just want to know, will it work when I need it to work in the right way, or is this something that I didn't actually know was possible, but now I can't live without it. The cell phone, I live in the UAE, where I think mobile phone penetration is like, I think it's 200% or 250%. The average person has 2.5 mobile devices. Well, gosh, I remember when I was excited that I had a little tiny BlackBerry stuck on my belt. That's
I had a Nokia.
Right, right.
Yes.
There's an economist I once read. He says, well, if you want to understand, simple economics, you ask somebody, how many 747s do you need? And the answer is going to be, need. I don't need any. But what if they were $200 a piece? Well, then you might need 10.
Yes, exactly.
So price and convenience really change the way that consumers look at things. And so I think that's the starting point for consumers. 100%. Are you creating an experience for them that is convenient and frankly sticky? So that's a starting point.
Yeah, yeah. And often, I'm thinking about my own, banking system, and I'm paying for nothing, and then my money is not doing anything, right? So I think, one of the things perhaps would be interesting is to see more and more banking making my money work. So right now it's not happening. So perhaps, one of the key attributes of banking would be towards that.
Well, look, if you're looking for a marketing job, we might be hiring you. You're speaking directly about our initiative that we call Active Money. It's an initiative that we have right now called Active Money, and it's precisely that. And how does that work? And again, going back to what I was saying, taking your investment assets and making them as easy to use as a form of payment as cash. That's our name, Securrency. That's precisely it. That's why we call it Active Money. It is precisely that, where your money is working for you when it's at rest. And again, normally those are two different experiences, right? I have my brokerage account, I have my bank account. But bring those two things together and do it in a very simplified way, and do it in a way where I can send value to my son who's in university through the same system, and I can go buy a loaf of bread at the store, or even buy a house, like you said, right?
Of course, I want to do that.
right. And what if you can do that from an investment account in one seamless move? You feel kind of good about that. You say, well, I'm moving from one investment into another investment, and my money never stopped working for me in that process. So yeah, that's brilliant. You're right on point, and that's exactly what we're working on. And that's the a product that we'll be rolling out here soon, and we've got some great partners around it. But you've hit it right on the head, so well done.
Okay. Hey, Patrick, thank you for all this wonderful insights. It was a pleasure to talk to you.
Pleasure.
And it was indeed